Good morning.
All right, let's see
Thank you for coming to a real estate backstory on a Monday morning.
No, we're gonna try it again. See if we lose anybody this time. So, nope, we're still there. So we're gonna just jump right back in and try and share our screen and see what can we do again here, to try and get us all up and running. So, more say that they're ready to sell this winter. Inventory really low. Homes are selling fast. A lot of folks think that home prices have peaked. Some folks are a lot more optimistic than I think we are right now. We are seeing interest rates that are moving up as well. But let's look at some of the real data here. And so, Realtor.com, did some recent surveys, and this is really important for listing agents to pay attention to. We went and asked sellers, does the state of the market impact the terms that you're asking for? So they broke this down by generational trends. So for our younger sellers, it says, yes, I will ask for more than I think my home is currently worth. Our younger sellers are asking for more money on upfront, kind of thing. Kind of across the board, all generations are saying, yes, I will not pay for any repairs or improvements for things that are found on the home inspection. Yes, I will ask to close and then rent back my home temporarily from the new buyer. So we're seeing probably more
demands on the seller side, but does that truly mean those demands are being met?
Not always are expectations, but we're also seeing we're having a lot of property.
That is that, you can will be considered a mortgage.
We're seeing more and more sellers expecting not wanting to accept certain contingencies, a lot more asking for a quick close. As far as like so please. Oh, we apologize about any kind of technical difficulty. All said and done. So, the sellers, are they expecting the buyers to be willing to forego contingencies like home inspections, appraisals to make the deal? The younger the sellers are, the more likely that they are. Across the board, a lot of our sellers are expecting to get asking price. The vast majority are expecting an offer within a first week. And so some important things to pay attention to with that is, what do we do when a seller says, let's just go ahead and list it, and then I'm going to make these repairs next week? Well, you're kind of, or I'm going to finish this, right? We got to make sure that when the house goes on the market, it's got to be ready to go. Our younger sellers also expect bidding wars. And the challenge there is that our younger sellers also think their house than what it's worth, and that they're gonna ask for more money, but they expect a bidding war, and those things don't work hand in hand. Like if you go slightly at or just below market, you're going to get a bidding war. If you're asking more than
you'll have very few
yeah. Now, our older generation, they expect more than asking price, more than any other generation out there. But a lot of folks really are. So these are important things for us to pay attention to as we're kind of going along and learning and going about our day. Now, we also have some other data. This is from Redfin kind of thing. And so, what's it look like for the sellers out there? Well, right now, home prices are up 13% from 2020. which is significant.
It's
Okay.
huge.
And now these are national data, but Georgia follows along in a lot of these trends the same kind of way.
Well, Georgia's one of the largest,
Yeah. So pending sales are up 7% from 2020, 51% from 2019. So these, as far as like when folks are like, well, the market's going to be falling, market's going to be crashing, things are going to be slowing down. All right, we're up 51% from 2019,
Prior
which is
COVID.
like, yeah.
So this tells you that, it is a great time to sell.
Still with a ton of demand. Now, new listings of homes are down 3% from 2020 and up 11% from 2019. Here's the good news, bad news is that 2020 was crazy. We had the biggest fall and winter that we've ever had. And so we are better than we were in 2019, back when things were still quote unquote normal. But we're down slightly from last year, but still we are only down 3% from last year, which was the craziest market we've ever seen. So
last
still a lot of
year we
demand.
had a huge uptick in the winter months,
Yeah.
which normally that is not the trend.
Now, when folks say, gosh, why are home prices doing the way it is? Active listings of homes are down 22% from last year and down 41% from 2019. Just the number of homes on the market is down huge. Okay.
And
so
they mean,
less property, a lot more demand, a lot less supply.
and this is for a 4-week trend,
Yep.
just so you know.
So days on market continue to inch further above 3 weeks. By the way, we're next to an air base, if you're wondering what the thunder is. So days on market is continuing to trend up, and we'd like to see that moving towards a more normalized market. That would be good. Our sale to list price ratio is declining at the same time. So it's slowly starting to taper down. We've been running over 100% for, gosh, 7 or 8 months now. And so the trend is where we're getting now. Part of that is because we still have some sellers that are not being realistic about their pricing and that kind of stuff.
And a lot of sellers are listing at the top of their market. And unfortunately, some of buyers just don't feel like that particular subdivision warrants that top dollar.
Yep. 4.5% of all listings have price drop. We're seeing this trend going up. And so this is where those sellers who are going out on the market and thinking, I can just throw a price out there. More and more folks are starting to have to really taper that number down and be realistic about their list price. So we're still seeing overpriced properties are not selling. Okay.
Correct.
Our total profit margin on home sales nationwide increased 48%, hitting the highest level in the last 10 years. Okay. That is really, really big. So you can see, last thing I want to wrap up on here is that for a long time here in Georgia, we've been running almost 10 years on the average home ownership tenure. In the US, it's been about 8.5 years, almost 8.5, 9 years, in that range. Average US home ownership in tenure since COVID dropped huge by like 35%. We're down to like over 6.5 years, which is way down.
And we all know that when you buy a house, your first few years is strictly interest. There's hardly any deduction of principal. So this is why the tenure is longer for the reduction. But at this paying basically is interest.
They're
appreciated. You basically break even. But in today's case, we have seen homeowners that purchase. It's just a crazy market we're in right now.
So what are the 4 factors that are really, first of all, they are going to have loosened mortgage standards. Crazy. I mean, like this is not like, hey, free for all, no doc loans and still have but we are, so we have lower mortgage rates, loosened mortgage standards, but not stupid lower. loosened. Ongoing inventory shortage. All the numbers we just showed is going on. What's happened, and then with COVID, this really massive work from home trend is really kind of helping to drive a lot of things in our economy. Overall, this past week, interest rates jumped. We're at 3.10 or 3.10. So that we're seeing interest rates inch up like we knew that they're going to, and they're going to continue to inch up. Total mortgage applications fell 2.5%. However, purchase apps were up 2%. So even though we're seeing interest rates rise, folks still know it's a good time to buy right now.
And a lot of people have locked in some of the rates, so they're kind of somewhat protected from last week.
Same time, credit scores reached an all-time high. Good job. We need to keep communicating this with our clients out there, kind of thing. The average FICO credit score increased by 8 points to reach 716 is the average U.S. credit score right now.
Awesome?
It's really good.
We haven't seen that in ages.
Yep. It was largely driven by the folks that a poor credit score is under 580. Sorry, that's just how they rate it. So I'm not trying to, if you have a 579, I'm not trying to pick on you. I'm just saying that's what's considered poor.
Right.
But that's the one that moved the most right now. So we're
good
seeing,
job.
yeah.
Your realtors out there educating your client about what to take as per process and procedure in obtaining their home.
Yeah, the big concern is what's happening with inflation. Inflation is driving so many things right now. So will that keep up? We hope so. Despite really strong sales, consumer sentiment hit a 10-year low in November. Of course, people are worried about pricing or the price of everything from hot dogs to houses. Everything is costing more.
Well, cost of living.
Yep. We kind of want so Windermere, the lead economist for Windermere, by the way, Windermere is the second largest real estate company in the world. And so their economist came out and shared some information about what's kind of looking, because, we're reaching the end of 2021. What's 2022 going to look like? And so I want to share with it because I think that his insights are really pretty good. And so first thing is looking at GDP and U.S. real gross domestic product history and forecast kind of thing. They're looking at where we're heading into is about a 3 or 4% growth, which is really strong. If we can continue to move into that, that will be just knocking it out of the park kind of thing. As far as like overall job recovery and employment, that continues to show. We are now as far as like number of claims, that kind of stuff, we're back at pre-pandemic levels for jobs. The biggest challenge with jobs that we definitely see out there is that the job market we're having this great reshuffling going on in the job market where folks are which is also driving inflation. The unemployment rate, which we were just talking about, continues to drop and drop and drop. And so you can see that that we're getting back to where we were in March of 2020.
You look at March and April, what a huge difference.
Yep, we are right there. So now this is the negative here, and when I say negative, but I think he's pretty accurate. An impact. And so this is what's going on with inflation, and so we're looking at inflation right now, kind of being really near where that spike, well, his expectation, and we tend to agree, is that this is not going to be a get done with quick thing.
Right.
We're going to carry this through probably the vast majority of 2022. It's probably going to be mid-year before we start to see any kind of drops in inflation. July, August kind of thing is really what a lot of economists and we're just not seeing any reason for inflation to really drop, and we do feel that that's going to be an important factor for housing. Now, the good part when it comes to inflation, I know it sounds weird to say inflation has a good part, but housing is a hedge against inflation,
right?
Because once you own a house, your rent doesn't go up.
Right.
Meanwhile, your property values do. So that's a really good thing for housing, as weird as that sounds. Solid growth this year and next year kind of thing. And they're predicting that, around 6% growth in existing home sales. And I think that might be a little bit aggressive. I think Ming and I are much more in the 3 to 5% range is where we like to see things.
And that's what Atlanta market's doing right now. It just depends on area too. Just remember, location always dictate the growth.
Yep. So overall sales price forecast, they're predicting about 7% we're a little bit more conservative than that. We feel that when interest rates move up a little bit more, even though they're going to be historically lower, we think that is going to, I think with inflation, what we kind of overall see happening is when anytime that there's inflation, the government slows the economy down. Sure. And when they slow the economy down, that's going to slow down a lot of things in order to control pricing, but it's also going to slow things like, say, real estate down a little bit. So, and then what's happening with the mortgage rates? They're looking at mortgage rates, ending up and I think that their forecast numbers are looking really pretty close. They're looking at around 3.3 for the first quarter, 3.5 second quarter, 3.6, and then ended up around 3.8 next year. I think if we could keep it under 4 next year, I'd be really happy with that. And my concern is, if they do slow the economy down, interest rates are not going to move up by,
huge amount.
A tenth. No, they are going to, I think they are going to jump up. I think they could easily move into 4s depending on what happens with inflation. So,
and what happened is too, the problem with inflation too, so you got a double hitter. So you have inflation at home and at the same time, higher interest rate.
Yeah.
As we have previously, well, if you think about previously when we discussed just that one point, cost a $50,000 buying power. So when you look at it that way, I mean, it's, is it time to buy? Is it time to sell? Yeah. Absolutely, all day.
Now, this is, I just shared with you what Windermere's forecast is. This is Zillow's forecast, and I have to throw that out there with a grain of salt because, Zestimate has had a really hard time predicting home prices. So they're looking at next year being an even higher, they're looking at property values going up by another 14% next year. I think Zillow's wrong, is what it is. But if we're gonna start sharing 2022 forecasts and what's kind of going on, I'm going to tell you that there's a lot of other folks that are a lot more bullish about everything going on.
Right.
We tend to think that this is not going to change our environment. It's still going to be a seller's market. We still have too many buyers that want to buy. And that's not going to change. We have the millennial generation is the biggest buying generation out there.
And Gen Zs actually are buying simultaneously at the same time as millennials. So, the age gap difference, but their thought process is a lot different. So
where are retirees going? And so these are all the top states where these are where the most folks retire from coming out of state. So we're not number 1, but we are number 8. Which is not bad because about 6.3% of all the retirees that are moving out of state in the United States come to
Georgia.
They got Georgia on their mind.
That's right.
Is that a viable? It ain't easy.
But thank you.
Being cheesy. How about renters? Renters are having a rough go of it. And so you can see what's happening with family rent index year over year. And so here in the Atlanta market, you can see that we were running right around 5% growth last year. This year, we are pushing the 13 to 14% growth. Now, we're not as bad as, say, Miami at 25%, but 14% on top of 5% last year, on top of 4% the year before. Rental growth is beating property price. And so for our renters, our friends that are currently renting, the idea of I'll just rent and not have to fight, not have to deal with this. Listen, that's how you end up not being wealthy. That's how because wealth in the United States is wrapped up in home ownership.
Correct.
We want folks to know that their rental rates are only going to increase. We need to be sharing that if we really care about people. So the top place to buy a tiny home is
Georgia. We're number 1.
All right, now we think we kind of like the idea of tiny homes. They're really kind of cool, but herein lies an issue because tiny homes are all built on a trailer frame. They're all mobile. Therefore, what are they? They're not single family residences unless they've been permanently affixed to the ground, right? So for here in Georgia, tiny homes are what kind of property?
Personal property,
right?
It's not a asset.
Yeah, it's basically a single wide kind of thing. If you want to get all country honest, kind of thing. So that has some different connotations.
That's a bill of sale versus a purchase and sale.
Right. And so, but the cool part is that you can get in a little place for between $40,000 and $60,000 plus whatever it costs for the land and that kind of stuff. We are seeing a lot more that are affixed to the land. If you are looking at moving into or helping clients in the purchase of a tiny home, make sure it's been affixed and it really is a real asset, not
a personal property.
Exactly, kind of thing. But Georgia's really, really popular because we have really good cost of living, can't read, but you know what I mean? All the stuff you see on your screen. How about that? We'll just cut to the chase.
Oh, goodness gracious. Right.
Federal income tax bracket rates for 2022. Now, here's the rub. These don't apply for this 2022. These really apply for 2023. But there's a couple of things I wanted to share out here, that all the brackets are broken up by income.
Absolutely.
As far as how they go. Our lowest tax bracket is only a 10% tax bracket kind of thing. The big thing has been, the tax breaks for the wealthiest Americans. The top tax rate right now is at 37%. The big controversy is, previously it was at 39 and 0.6. So it's basically 2.5% lower than it was at some point. And so that's what you really see for a lot of folks. What I kind of wanted to kind of focus on here is that, standard deductions are changing and they are going up. But the thing that bothers us, I think, more than anything, and we didn't really realize it was this prevalent. 90% of households take the standard deduction. Okay. Some of the best money we've ever spent is on a CPA and accountant. Now, my lovely bride is an accountant. And we don't do our own taxes. Right. We don't do taxes, right? So, I mean,
please pay your accountant well. Because now, let me tell you, they will be your biggest cheerleader in saving you money.
Yeah, but realtors, we are small. You are small business people. You own your own business. There's so many things that we can write off. If you're taking the standard deduction, you are just kicking yourself in the face. Okay, that's just not wise. I mean, because we can write off mileage. There's just so many expenses that
consult your tax accountant.
Okay, yeah,
we're not a tax accountant.
Yeah, we obviously,
right there.
but we need to make sure that we are being wise, because we also know of so many agents that are in trouble with the IRS. And
that's because they're not taking their tax deduction and accounting for everything that they do on marketing and obtaining clients, as well as write off some of the mileage and what have you. So,
but the other challenge here, I don't know if you guys have caught the one of the things that's going through Congress right now is the Build Back Better plan, and they have to, and they're trying to pay for that. One of the ways that they're going to be paying for that is getting off. Or is increasing the people that quote unquote cheat the system or do these different things or don't pay their taxes in time. And unfortunately, I don't mean on the cheating thing, but a lot of realtors are behind on their taxes kind of thing. And the big push for this Build Back Better plan is that the IRS becomes a kind of a hammer thing going on. Get your stuff straight. It's really important. Get the deductions. If all you're doing is taking the standard deduction seriously, it is costing you money, and that breaks our heart. So please don't do that. All right. So here are your tax brackets. So you can kind of see just where those tax brackets lie, depending on what your income range is out there, kind of thing. That's the different ones. All right. NAR, the board approved different MLS recommendations. Now, this is kind of written out in lawyerese. And so there's a lot of actually good points on here, but some of it's hard to understand. And so I don't want to bore you, but some of these you really need to kind of know what's going on. And some of these I'm actually really, really for. So they made 6 changes. One is that there's one data source. And so that's something that we've needed for a while, kind of thing. It's to have a single data feed in accordance, as far as the rules go. So that makes good. All brokerages are now going to have some sort of a back office feed to where it lets them use and require MLSs to provide participants a brokerage back office data feed. So now all brokerages will have access to a back office data feed that they can use. The next one
IDX.
Yep. Well, this requires the participants IDX displays identify the listing firm and an email or phone number provided by the listing participant. But
in a reasonably prominent location and readily visible.
Here's where the wording doesn't really match, because the rule now is that not only do the brokers have to be listed, the listing agents now information has to be listed, and that's something that we're really pro about. We wanted to see
and
more.
It should be that way, because I know a lot of you have grown and moaned about Zillow selling our data back to us for referral. Well, so hopefully with this, that the client can see who the company is,
who the listing agent is.
The company is, the agent is, and their information is prominently displayed, if not equal to the others. Because I know when you go to Zillow right now, you have to scroll all the way down, and it's a little teeny little box, and then you see where the source of the listing broker, not necessarily the agent.
Exactly, and so that's good. Now the display of listing broker offering, what the listing broker is offering for compensation has to be listed on all data sources now. I mean, currently, if you go into Zillow, this kind of stuff, you won't see what that is. By the way, all these take effect January 1. The next one is that we can't offer our services for free, and we shouldn't. It's not true. It's false. In the past, we've seen agents who would say, use me, it doesn't cost you anything, I'm free. Well, guess who bought the house? The buyer buys the house. And guess what they buy when they buy the house? Everything that goes along with it, including the listing fees, the whole 9 yards. So at the end of the day, the buyer is paying.
So therefore, please don't use that verbiage anymore, because that will cost you. And if not, arise some lawsuit, I'm projecting to see down the road.
Yep.
So,
and then the last thing is that you can't filter out or restrict listings in any of your information that
compensation. If a listing is less
only
than 3%,
you can't not share it.
You cannot
that's
filter
not
that
a variable
out
anymore.
So
now if you share a list of properties, that's not a reason why you could filter it out. And this is
why when you have a buyer brokerage agreement, make sure you explain that to the buyer. Okay.
Yep.
And now you definitely, I know it's against licensed law to put your commission on a purchase and sale, but there's nothing prohibit you from negotiating that before you're under a contract.
Yep.
And ask your broker for a special stip or your favorite attorney, and to where you can reflect that negotiated percentage prior to binding, because that all is negotiable prior to.
All right. Search changes coming on December 7th. FMLS is discontinuing area numbers. So it used to be you could go in and search by like area, 210, 211, that kind of stuff.
Yeah.
And that ability to search by area, and honestly, that's a throwback to way back in the day. Okay, we all knew what our area codes were and that kind of stuff. It's totally. You don't have to search.
So
that
we're
way.
doing now zip code or map.
Yeah.
So area is irrelevant at this point.
Nearly half all Americans expect to retire in debt. They had a new survey came out, and then I kind of wanted to share with you that we need to be serious about what we're doing with our money. A lot of times we'll see, we can see the agent just had a new closing because they got the new car kind of thing, and so we got to be smart about how we're managing. If you look at how much debt that like 70 plus, for folks over 70, what's the biggest piece of debt that they have? Mortgage kind of thing. And a lot of us got in this business because we wanted to be much more independent, but that means that we have to be, you want to be financially independent as well. It's
amazing, actually. If you look at the age bracket, 30s and below has one of the highest student loan debt. So, and that's, just make sure if you are going to college for these items, make sure you're committed and also pay back your loan, because that's going to haunt you for the rest of your life.
Well, you're not getting rid of student loan ever.
Matter of fact, they'll prohibit you from obtaining a home because of student loan. So if you don't get that in that particular file in order, you will never be able to afford to purchase a home.
Yeah. So there's been a lot of talk about why Zillow went stopped into
Their
the home buying
algorithm.
business, but why couldn't they make their algorithms on pricing work? And so I just want to share what our thoughts are on this. So first thing is that we know they had a lot of staffing issues, and personnel issues was a really big deal. And to move up and grow a business that size and be able to train a workforce that
Infrastructure,
big,
right?
so that was one. The Corona, Rona has affected so many businesses as well. And but really what Rona did to our markets and how that changed it. How does an algorithm deal with these black swan type of incidents kind of
Right.
thing? Third thing is that if you really look at it, they were just losing money. They might make a money on a per house deal, but there was no real path for. I mean, unless they just wiped out realtors, then there was no path forward for that to be able to work, because they may make money on an individual house, but by the time you put in overhead and that kind of stuff, they would have to like literally wipe out the housing market in order to make their numbers work.
And also their algorithm was projecting, as you can see earlier by our exhibit, Zillow was estimating 13%, while the national is estimating around 6 or 7%. So you can see based on the algorithm was a little off. And therefore, when it comes down to nitty gritty, when you balance out a property, they become negative versus a positive based on their trend.
And then, how about competition? They have Open Door, OfferPad, and there's always a new iBuyer popping onto the market right now. So there's a lot of competition, and they were all going after the same little piece of business.
Correct.
They also had so many data points in their algorithmic data that it's really hard when you have that many data points and you don't really know your market, because let's face it, number 6 is like the most important one to me, and that real estate is local. You just can't know what, like I can't know what's going on. I might be in the same state, but I don't know what's happening in the, say, Savannah
Correct.
real estate market, what's really happening.
And what happens if you have a flood or just say a natural disaster? Does that apply still with the overall data point? No, it doesn't. So you have to make adjustments when it comes to local.
Yeah, because we have market fluctuations, but the market fluctuations are very, very different in all the different sides, like what's happening in East Point, what's happening in McDonough. That's not the exact same thing. So again, we get the real estate is local, but there's so many different fluctuations that go on. Zillow also did a really poor job of non-similar properties. If you have a house sitting on a little bit of acreage and it's not inside a neighborhood, it's a shot in the dark. They just kind of put us,
they spitball
it kind of thing. It's about there kind of thing. If a house had any kind of unique elements to it,
there was no consideration.
They totally lost touch of that. Like this house has a pool. Oh, well, you got a pool.
Just remember, algorithm, it is based on a set of data and mathematical calculation. It doesn't take anything of unique value in consideration.
And the last thing is that even though they may have been efficient, there was no heart, there was no personal touch. And if you really look at from 6 through 10, what we really want to highlight here is that being a really great realtor, knowing your market, being really knowledgeable about what's happening, being understanding of your marketplace, what's going on with pricing, how to carry a client through, how to hold their hands,
and also talk to your client and reassure them, and also educate y'all. I promise you, if you educate your client, at the end of the day, you come out winner. And if not, even if it's a bad transaction, at least your client knew going forward what the potentials were. And sometimes we don't like to admit our own mistakes. And at the end of the day, you can say you truly did your job efficiently. And unfortunately, not all clients are good clients, because some, it will take about 2 or 3 agents go through before the 4th one comes along and they listen to what the 4th one said when the past 3 has been telling them all the same thing.
So basically, to sum up, they couldn't make it work because we're better than them. And I know that sounds like arrogance, but like we know our markets, we know our clients, we're in the marketplace every day. That's
never ever going to be changed out.
And a computer's not going to fix that. It's not going to replace us. So yeah, we see where technology is coming into our marketplace more and more every day. But at the end of the day,
The
A really great
algorithm.
realtor is so much better than any algorithm, any computer. So, don't be intimidated by this. I'm glad that we kicked their tail. So
Well,
it's
I'm
straight
glad
up.
to a certain extent, not glad because I know they are suffering right now.
Yeah.
So
Yeah.
I
I mean,
don't
we're
look at
not,
any
yeah,
business
yeah. We're not
when
like
they're
happy.
suffering. I want you to know at the end of the day,
Yeah.
laying out 20,000 employees and shutting down multiple of their offices. So I do wish them well, because at the end of the day, real estate is about local folks. And this is why I urge those of you that have family members that are away from your local area, please refer them out, because at the end of the day, you're not doing your family member any services.
All right. Higher prices and longer wait times don't appear to be slowing down new construction kind of thing. Home builder confidence rose to its highest level since May. However, even though that they're more confident,
Mhm.
new home starts fell. So it's not looking really good.
And a lot have to do with material costs, permitting, and just the
Well,
overall, along with the weather, the usual.
these are the shortages right now of builders and remodelers. Number one is,
Framing.
90% are missing framing crews,
Yeah.
rough carpenters, finished carpenters, plumbers, bricklayers, concrete workers, electricians, HVAC. It is massive. Now, I'm not trying to like oh let's worry about the builders. What for me, because this list shows not only builders but remodelers and remodeling folks. The smaller guys. A lot of times these are the folks that we deal with. I know that clients, or I mean that when we had clients that needed a painter or a plumber or a this
They're
or
hard to
that,
come by.
they are hard to come by, and so do you have a list of people ready to send to your clients? So many of our sellers like I need to sell, but I need to, we need to change the carpet, a painter, I need to have some electrical work done. Who do you call? You need to decide that now. You need, and you're going to see the same thing we did. Like, oh, call so and so. Well, they're not in business. Call so and so. They're too busy. Call so and so. They're not
They
doing
can't
it more.
get there for another 2 months.
Yeah. We'll be.
I mean, that's the usual answer at this point.
So we've got to be really aggressive about making sure we have what we need to help address our clients' needs. So
With that said,
we'll stop share. So thank you guys very much. Hope that this was helpful to you. I apologize if some of the noise or if our internet connection wasn't the greatest, but we hope that you got a lot out of today. If we could be of any service, please let us know. Call, text, smoke signals. We do it all. So you
and
guys
y'all
have a great Thanksgiving.
happy Thanksgiving week. Enjoy your time with your family, and we'll see you next Monday.
Love y'all.